Hi everyone, welcome to another episode on the Joan Wick channel. Today I'm going to go into shifts in the market, and we're going to go specifically into the difference between a market structure shift and a break of structure. So what's the difference between these two? Well, one occurs to confirm a continuation of the current trend, while the other confirms a reversal of the current trend from bullish to bearish or from bearish to bullish. So if we look at this diagram right here, we have a bearish structure making lower lows and lower highs. As we break each previous low, we are breaking the current structure and we are continuing the trend, which is the bearish trend. And as soon as we break the high, we are breaking the current trend from bearish to bullish. And that break of structure is what is known as a market structure shift. Functions exactly the same, but we find it at the base of a swing when we break the current trend. So, how do we confirm this? Well, to confirm the direction, we look for displacement. So what is displacement? Displacement is full body close candles above or below the previous swing high. So when we look at this diagram right here, we see that this candle right here broke the previous swing of the candle below, of this candle right here. And we see it reject with this giant wick and close within the range, just above this low right here. What do we see here? Long wicks hint at potential areas of interest or a sign of reversal. So we see we have this bearish move down here. We close aggressively. That's important to note that we close aggressively back into the range and we continue bullish. Why? Because when we see no displacement, what that tells us is that it is a failure to continue in the current direction. So if we look at the second example, we're in a bullish structure right now. As we're making higher highs, we are closing aggressively above the previous high, which means we are displacing. And so we see price respecting the bullish order flow. And here, as we make this second swing high, note that we don't close above. In fact, we make these long wicks and we close aggressively down back into the range. And instead, we close below the low instead, breaking the current trend and confirming a market structure shift, because we're moving from bullish to bearish. So let's see some examples on the chart. Okay, so if we have our chart example here, we are moving from bullish to bearish to bullish. So if we start from here, this would be considered the market structure shift that changed our bullish trend to a bearish trend. And now we will look at the highs and lows. We look here, we went from this swing high to this swing low. Now if we look at our next move, we did not displace above these highs, but we did have an aggressive displacement below these lows. And this would be considered our break of structure. Why? Because we're now in a bearish trend. And when we're in a bearish trend, we are breaking lower lows to continue the trend. And our break of structure, we confirm this with an aggressive move, with candles displacing, with large momentum, large candle, large aggressive move like this. And an easy way to tell is that we leave behind these nice fair value gaps as well to show displacement. So when we're displacing, we are telling the story that we want to continue the current direction. So once we made that swing low, we come and we make the swing high. Take out this low, make another swing high. This is our new high. make a swing low over here. We break the structure again, meaning we want to continue bearish. So we create another swing low over here, and then we create a swing high over here. Do we break above these highs? No. Do we break below these lows? Yes, we do. And so hence we do have a break of structure. Why? Because we have a big candle closing below this low, and look, we have a fair value gap as well, and we do not displace above these highs, but this now becomes our new high. This becomes our new low. We don't displace above the highs, we do displace below the lows, therefore a break of structure occurs. And then we form our new low right here. Do we break aggressively below these lows? No. In fact, we go and we close back inside the range with an aggressive bullish candle. And what does that tell us? When there's no displacement, we are failing to continue the current direction, which is bearish. So now we're moving higher. And where's price going? Towards the previous high, breaking the current trend, moving the structure from bearish to bullish. And therefore this break of structure becomes our market structure shift. And so you'll see that it continues just in the opposite direction. This becomes our new low. This becomes our new high. Do we break structure here? Yes, we break structure with an aggressive move, displacement, meaning we want to continue higher. And so the cycle continues until we find our market structure shift, which we'll find at this low here, continuing a bearish move from a bullish trend over here. So that's essentially what breaker structure and market structure shift is. But you might be wondering, Joan, why are you using such easy examples? Okay, let's go to something like this mess over here. Okay, we'll start from this point. We can see that we're in a bullish structure. We're moving from, okay, we'll just say we're from bullish structure. We're just starting off bullish, okay? We see this low, we see this high, create a new low. Do we break structure? Yes, we do. We have an aggressive move up. We are interested in continuing the trend. So we don't break below these lows. This becomes our new high that we look at. Do we break structure? Yes, we do. This is our new low. Okay, then you're wondering, okay, do we break structure over here? I'll let you pause 5 seconds to think. Do we actually break structure here? The answer is no, we don't. You can see we are struggling to push past this high. We're going back, we're closing back inside. We're trying to go back up again, but we're closing back inside aggressively. So no, we are not displacing, just doing a whole bunch of nonsense, but we are making higher highs. So these are the highs. Well, this is the high that we're looking at now. But we are forming this new low. So as we make these highs, come down, make this low. Do we break this low? No, we don't. Instead, we close back inside the range, and this becomes our new low. And as you can see, it does this for quite some time. What price is doing is it's consolidating, which means it's staying inside a range. It's moving sideways. And so we're just waiting until we get to this point. Do we get a market structure shift? No, we don't. We are still closing back inside the range, and therefore we are only continuing the bullish trend. Therefore, we actually do not get a market structure shift at all during this whole show over here. But in any case, that is how you tell the difference between the two. One continues the trend, that's break structure, and one shifts the trend entirely, that would be your market structure shift. Stay tuned for later videos where I will show you how to use this when you're trying to catch a trade. And yeah, hit that bell icon, subscribe for more, and have a lovely rest of the week.